Paying real estate taxes in the Philippines is straight up stupid, and in today's video, I'm gonna tell you why. In a time when the real estate market is already crashing, a big pogo ban leaving us with a big oversupply of condos and offices, and a bunch of investors sitting on the sideline, our tax policies are somehow making things worse. Today, we're gonna dive deeper on this topic. We're gonna talk about why our tax system doesn't make sense, what the reasons why it might be this way, and how we can push for reform to create a fair, thriving, and affordable real estate ecosystem. So stay tuned to the end where we talk about real practical solution to fix a potential real estate crisis. This is the untold story of Philippines real estate taxes, how they started, how they work or don't, and what we can finally do to fix them. Imagine a Monopoly game, but instead of winning, every time you try to buy, sell, or even rent a property, you just bleed money. That's what it feels like to invest in the Philippines real estate today. At a time when the market is already hurting, condos are sitting empty, buyers are staying away, and pogos have vanished. The one thing that should be helping drive recovery is doing the opposite. It's outdated, confusing, and punishing the very people trying to keep the market alive. Today, I want to walk you through a story about how this broken system came to be, the real reason it hasn't changed, and some bold solutions that could finally fix it. Let's talk about the capital gains lie. We're gonna bring you to the exit. You bought a home years ago. You finally sell it, maybe even at a loss. But then the government steps in and says, you owe 6% capital gains tax. Hold on, you didn't gain anything. In the Philippines, capital gains tax isn't really a tax on your profit. It's a tax on the entire selling price or on the zonal value, whichever is higher. So say if you bought your condo for 6 million and you had to sell for 5 million, too bad. You still owe the 300,000 in taxes. But why? Because the law doesn't care if you made a profit or not. It assumes you did, or you're lying about it. And in today's value, zonal values often exceed actual prices. Sellers are being taxed on money they never made. It's like getting fined for driving a car that isn't moving. So let's go back to how this tax even got started. To understand how broken our real estate tax system is today, we have to go back to a time of chaos, the mid-1980s, right after the Marcos dictatorship. The country was reeling. The economy was unstable and corruption everywhere. In the real estate world, one trick had become the norm. Massive underreporting of property sales prices. You'd sell a condo for 2 million pesos, but on paper, you'd only declare 800,000 pesos just to dodge the taxes. This kind of fraud was costing the government billions. Enter Jamie Ongpin, the new Secretary of Finance under President Cory Aquino. He knew the government couldn't audit every transaction, so he proposed a bold workaround. Forget about tracking profits, just tax the sale price, or the BIR zonal value, whichever is higher. A flat 6% tax, no questions asked. That's how the capital gains tax was born. But let's be clear, it was never truly a tax on gains. It was a simplified exit tax designed to stop fraud. Back then, it worked. It brought order to a corrupt system. But no one expects this quick fix to become permanent. But today, we've got blockchain, we've got land titles, we got BIR e-filings, AI-powered valuation, and we're still acting like everyone's trying to cheat. Now, let's fast forward and let's talk about the PFITA problem. And just when you think it can't get worse, it just might. There's a proposal in Congress called PFITA, P-I-F-I-T-A, which stands for Passive Income Financiary Intermediary Taxation Act, something like that. And it wants to raise capital gains tax from 6% to 10%. In a time when the market is weak, listings are piling up, and sellers are already losing money. The government wants to take even more when you're on the way out. So I thought about why they would be doing that at this time. There can only be two reasons that I can think of. One, maybe they're thinking by making it harder to sell, fewer people will list, maybe reducing supply and keeping prices from collapsing. That kind of makes sense because they're saying after 2030, the capital gains tax should come back down to the normal 6%. But I think that logic backfires because if people can't sell, liquidity dies, the market freezes, and no one wins. The second reason, maybe they only care about collecting more tax revenues and they don't really care about how this affects the ecosystem. Would it be surprising? Let's talk about the VAT trap. The real estate taxes don't just punish you at the exit. Sometimes they trap you for just trying to earn a little extra money. Let's say you rent out your condo once, let's say 6 months, and you earn $300,000 in rent. Later, you sell the property for say 20 million. Because you rented it out once, the BIR will reclassify your property as an ordinary asset. And now you don't just pay 6% capital gains tax, you pay 12% VAT on the entire selling price. That would be about 2.4 million pesos just because you try to make some rent. And here's the crazy part. Under the train law, if you earn under less than 3 million in rent per year, you're exempt from VAT on the rental income. But it doesn't protect your sale from VAT on the entire amount of the sale. So the system ends up punishing honesty. So who in the right mind would report the rental income? This doesn't make any logical sense. So let's try to understand why VAT is so broken. Just 2 years later, in 1988, the Philippines launched another major tax reform. The country needed more revenues. The old sales tax system wasn't cutting it. So under Finance Secretary Jesus Estanislao, the government introduced something new, VAT, or value-added tax. VAT was modern. It followed models from Europe, and it was designed to target big businesses and developers who were slipping through the cracks. But then came the unintended consequences. Real estate got swept into the VAT net. The law didn't draw a clear line between large-scale developers and small-time investors. Suddenly, even ordinary people renting out their condos risked being labeled as engaged in business. What started as a law to tax corporations ended up punishing ordinary property owners. It's a case of legislation that never evolved, written for an economy that no longer exists. But now, one Airbnb night and your property gets reclassified. The rules just haven't kept up with how people live and invest. We're applying an old framework to modern realities, and it's costing small investors like you and I millions. Let's talk about the cost of fear and how it creates dead capital. What happens when taxes feel like landmines? People stop moving. Thousands of condos in BGC Makati or Ortigas just sit empty. Not because there aren't renters, but because the tax risk is too high. Some owners would rather earn nothing than trigger a VAT penalty they can't afford. This hurts tenants, it hurts honest landlords, and it strangles the economy. Conversely, a healthy real estate market means people are moving, growing, building lives, and right now, we're watching it freeze. Now let's talk about the zonal value scam. And when sellers try to exit, they're hit with another wall, zonal value. The BIR had no reliable way to verify actual market value, so they created their own benchmark, zonal values, a list of BIR assigned prices for every street, barangay, and municipality. Sounds fair in theory, but in practice, these values were often based on rough appraisals, guesstimates, or political input. There's no transparent formula, no real-time updates, and for most property owners, no way to challenge them. Even today, zonal values remain frozen in time, in some areas way above real market prices. It's a system that started as a tool to stop cheating, but today it punishes the honest and protects the government's tax base, no matter what's happening in the real world. In many cities, actual selling prices have been dropping lately, but BIR zonal values in some places, they're up 300%. And these are numbers that government invents, and they don't necessarily reflect reality. And for many years, it wasn't really that big of a problem because actual values were higher than zonal values. But you're taxed on the zonal value anyways, if they're higher. So even if your property lost value, the tax office pretends like it didn't. But why? They either assume you're lying about it, or maybe because inflated zonal value guarantees tax revenues? Maybe this isn't an accident, or maybe it's just a feature of the system, not a bug. Who knows? It wouldn't surprise me. In other parts of the world, they've figured out a better system. Let's talk about how they do it differently in other parts of the world. So let's take a quick flight to places like the US, Japan, and Europe. Things are built differently. You get to deduct depreciation on your property. That means you can show a paper loss and pay less in taxes, even if your home is gaining in value. You can even roll over capital gains into a new property, and it's called a 1031 exchange in America. So the money just keeps flowing into the market, not out of it. You get to deduct your mortgage interest, making ownership more affordable. And there's no additional tax on the sale of the property just for renting out your property, because it gives them more options at affordable rent. And the best part of the system, local governments earn from property taxes, so they're motivated to improve roads, schools, zoning, and grow values over time. In turn, they end up collecting more property taxes as values increase. It's an ecosystem built for growth, not extraction. And all of this creates a robust and thriving real estate ecosystem. So what's holding the Philippines back? And meanwhile, in the Philippines, there's no deduction from write-offs, no capital gains tax deferrals, not for normal investors, no mortgage interest deductions, there's high taxes, confusing rules, and a system where national agencies and local government units don't even work together to make real estate better. It's a system built on fear, penalties, and a lot of paperwork. So let's talk about some real solution that can actually work. But here's the good news. It really doesn't have to be this way. Here's what we can do. Allow depreciation deduction. Properties do lose value from wear and tear, so let investors reflect that. Let's create a capital gains tax deferral system. Let people reinvest that gain into housing, tax-free, to encourage more reinvestments. Let's lower or eliminate taxes for affordable housing. Let's make it easier to build where it's needed the most. Let's really align local government unit incentives with growth. Let's give cities more tax share based on real values, not zonal values. And let's make sure they really invest in infrastructure. We gotta fix zonal values and transparency. Let's update them yearly using real market data and let people appeal with, say, real appraisals. We should encourage legal rentals, tax income, but not behavior. So reward people for playing fair and eliminate this VAT on the sale of the property for renting out your property. Guys, that's a wrap. Real estate should be a growth engine, a wealth creator, a foundation for families and futures. Right now, it feels like a trap, but it doesn't have to be. We have the tools, we have the talent. What we need is the will and the laws to make it happen. If you believe we need smarter tax reforms, share this video, join my discussion on Discord, and push this message forward. Make sure you subscribe and hit that notification button so you get my next update about Philippines real estate.